pre-NFP day, everybody. How's everyone doing today? Ron, Patrick, hi Kevin, hi Necktie, Ziggy, my trading warrior brother. Everyone doing okay? All right. So yesterday opened the show showing a shark pattern, one that I received from Diego Katzman up here in the Kiwi. Nick came on, said she liked the shark that was up here above 71. If I were you, I'd be covering at least half between here and there, between here and the 200. Should have at least, where we at, 61, 40 pips or so. Hi, LaShawn, how you doing? Hassan, how are you doing? So it could turn out to be a bit more, but everything and anything can happen on the NFP. Give me why. You don't have to agree with me. You may want to sit right through the NFP with this position, but just give me a why that you get it. It's strictly money management. You never go broke taking profits, especially on half. It makes it a riskless trade. That's the position you want to get into as soon as possible when you're trading, from assuming risk to eliminating risk. That's the key. Okay, so I'm looking at this euro right here, and I think the worm's turning a little bit in EG. Red candle in euro, 3 blue candles in pound. So I think euro pound's going to correct, and I still think there's a chance. I think we had a pretty strong ADP. We held this 200 on the 1 hour in the euro yesterday. I said if you sell it, you're wrong over the high of the move. Never took out the high of the move. So if we could start clearing 112 to the downside, I wouldn't be surprised if we saw it take out stops here, and possibly trade under here. You're wrong over the high of the move, because over here we're going to go to 1300, the election high, and go for stops there. But I am seeing a little change of character, and we are diverging fairly dramatically in euro pound here. Right here. Pretty classic 1, 2, 3. Pretty good divergence here. If it was an NFP, I'd say sell rallies. Now this 86.50 area is going to be pretty important, but to me it looks like you've got a little top brewing here, and that we may have peaked there. There's your 1 hour. There's your 4. So that would imply that the pound is not going to be your preferred short, at least for a little while. The euro is going to be your preferred short. And if this scenario unfolds, I'm not talking about a euro crash. I'm just talking about a reaction in a bull market, right? And this could set up some pretty good buying opportunities back down here around 110.50. Everyone see this line I'm using? So that's the way I see things coming into today. I don't recommend you put on a lot of new stuff. And my personal opinion is that you go flat prior to the NFP, and then you're not betting on a reaction. You could react to the reaction. So let's see who's in the house. Let's see who's here for the team. Also, we have Cody Willard today. Are any of you familiar with Cody? He was an anchor on Fox Business News for many years. If that happens, then you'll be stopped out. Aussie still looks weak. I'm just reviewing what I talked about yesterday. So you recall Kimster talking about that harmonic shark formation in Kiwi. And I'm not saying to buy or sell anything. I'm just telling you what I see. That there's, I think, a shift going on in Euro Pound. And it was a pretty good guide to me. I don't think we're there yet. One of the members, I think we may even try 104. Everyone keeps trying to bottom pick Aussie Kiwi. And I know it's looking cheap here, and last week someone asked me that too. I said I wouldn't get long unless we got back over 580, which we didn't do, and continued lower. There is divergence here. But when I look at the daily, there could be a possibility we're going to test this major trend line here coming in around 104. So if I did anything in Aussie Kiwi, I'd maybe put a small toe in the water, Ron, at the most. Okay? So everyone clear with what I'm seeing today in front of the NFP? Any questions? There's no such thing as a silly question, only silly answers. Before I hand it over, I want to show you guys I just got a new mentee that I'm teaching to trade right here. Here's my new mentee. This is Caitlin, my granddaughter, and we were talking a little bit about, you know, the dollar weakness lately. She said, well, yeah. She said, oh, Granddad, if the dollar's going down, how are you going to be able to afford to send me to college? I said, well, my little Caitlin, I'm an FX trader, and we don't have to stay in the dollars if we see a better currency opportunity. So then she just picked up her bottle and continued to eat with a voracious appetite. So anyway, that's my newest mentee. I know Steve.
Dale.
Hey, Steve, how are you, buddy?
Fine, fine. You bring back memories that unfortunately for me are not far away. You know, my son is just a little bit older than she is.
Yeah, she's 6 months. Yeah, they don't stay babies long, do they?
No. Mine is 14 months old, and you know, I understand how fast time passes just by watching him grow.
Yeah. So
she looks great, by the way. You look great as well.
Oh yeah.
Special is amazing.
I fell in love right away. So anyway, what's on your radar screen, buddy, going into this pre-NFP? Do you kind of have the same trader's mentality that I do? It's like, you know, why take a trade here, especially if, say, you're a 2-3 day swing trader, and try and compress it in time so you're not affected by the NFP tomorrow?
I'll tell you. I won't tell you that I don't keep positions ahead of the NFP, but I definitely approach my positions in a different way. For example, if I have a position that can be affected by the NFP and is already, for example, in the money, I might, you know, just take partial profits, for example. If I have a position that is out of the money, for example, I might consider the risk and reward, because there are many cases that the market has already determined more or less what to do ahead of an announcement. Now I'm generalizing, and not only NFPs. So in this case, for example, if you are to get hurt by what is the, let's say, well-accepted possibility, you say, okay, I'm going to keep it because the market has mostly priced in whatever can work against me. And, you know, I'd rather hold and wait for a surprise that the market has not priced in which case the risk-reward is amazing for me. Other times you just, I would not establish a fresh position, obviously, ahead of the NFPs if it's dollars.
Okay, so you're with me and not establishing fresh positions. You're just managing
Very rarely, and the rare cases is what I told you. For example, ahead of some announcements, you see that the market is already pricing in, let's say, 95% of something happening.
Yeah.
While in your mind, that possibility is, let's say, 60, 70%. So you see a discrepancy between what you believe is the likelihood of something happening and what the market believes. So in this case, it might be worth it taking a shot, but still you have to be careful. I mean, not use high leverage, know exactly what you're risking.
I wanted to get your view on the Dixie because we did not make new lows here.
Mm-hmm.
I'm going to give you the charts. I want to see your charts, buddy.
Sure.
And a lot of people are saying it broke down from a bear flag yesterday.
Yes,
and we're still making higher lows. We're still making higher lows, and EG might be turning. And I'm wondering if you think that maybe what we've had is an A, B, and that we could have a C wave now. You know what I'm saying?
Yes,
A up, B, and still rally towards that 98 or so level, 98 and a half.
It's not impossible because we have, I mean, there were two elements here I was monitoring. One was that this looked like a very, very clean textbook, in a sense, bear flag. It's exactly what you expect to see. In a bear flag, you expect to see a recovery that is, slow and undecisive. Right. Usually it channels like this, this one did.
But what about lack of follow-through today?
Exactly, and that's what I want to say. And usually this lasts for a few days. But on the other hand, there were two things that were troubling me a little bit. Although I admit that my main scenario, and it should be, because statistically speaking, that is the way you should approach it. My main scenario was the bear flag. But on the other hand, I was monitoring this RSI divergence you see down here on the daily. Okay. That it was obvious we didn't break to a new low, but it was obvious that even if we did, the RSI had quite a distance from the previous low. So even if we did break to a new low, we would still not have a new low in the RSI. And as you said, we broke below it. We closed below it yesterday, but on the other hand, we have failed to see any follow-through. Of course, somebody can also tell you that if we close around here today, it's just a retest of this channel, and then tomorrow, for example, with NFPs being perhaps the trigger, who knows, we might then see the follow-through we're expecting down here. Yes, but the USD yen reaction is also showing some trouble there. I mean, yesterday we had the same picture for USD yen. Let's have a look at it.
Right, and the yen looks like it could trade 12.5 or so again.
Yeah, and today we're getting a morning star formation, the last three candles, at least from where the daily candle is at currently. Of course, the key level here is 112, as it was here, as it was here, as it was here, as it was here in this test, etc., etc., etc. So, I'm monitoring this recovery. It came exactly from a second test of the 61.8, so that's also an element that we see for the time being. I mean, if we turn higher, this will be like a double bottom at the 61.8. But
and we could get a C wave up towards 1288.
Yes, you're absolutely right. But what I'm going to tell you here is the following. It's not an accident that we see choppy and hard to read price action in the short term, because that is a usual thing to notice ahead of big announcements, simply because the market does not want to commit, full size to anything. That's why. Yeah. So perhaps today's movement is some position pairing. Not impossible at all.
Yeah, sure. People worried about maybe getting a good number. ADP was good.
ADP indeed was good, yes. Yes, so perhaps that's all this is. So yes, definitely I would not commit to most USD pairs, not to all. I'm going to show a couple already, simply because I think that if you don't already have a position that's working out for you, just wait to see the first and the second reaction of the of the NFPs tomorrow, and I need to remind here my usual pitch about seasonality. We also have a new month that started today. Tomorrow is the 2nd. It's going to be a good indication.
Yes, 2 months in the books of FACE.
True. Yeah, that's very true.
It's our 2nd month anniversary.
It's on 3rd.
I hope that we've added value to our attendees' goals, what they're trying to accomplish.
Yeah, I mean,
I'm pretty confident we have.
I think the 1,200 people that have already registered for the webinar in 2 months is a testament to that.
Oh, yeah, you're right. You're a numbers guy. I was just looking for someone to say, "Oh, I love you, Dale." You know, you're looking at numbers. You know, I'm from the heart, man.
Oh, I'm totally with you, and you know that's one of the reasons people are coming here for you.
I'm kidding you. I'm kidding you. So okay, yen.
So tomorrow is the 2nd of the month. So there is a good chance that the move we're going to see tomorrow is going to set the pace and the tone for the month that's just starting.
The whole month?
Yes, because very likely and very often, more often than statistics would imply, we see that the trend for a whole month is being set during the first 2-3 days of the month.
Interesting.
This is what we call with seasonality. I mean, for example, a month has on average 30 days. So that is 10 periods of 3 days. So you would expect, for example, that if it was a completely random sample, you would see the low or the high of a month 1 out of 10 times during the first 3 days. But that's not the case. It's actually way more often than that. And one of the reasons, we've talked about it before, is the way that big market participants make decisions on where to invest. You know what I mean?
Right.
They might have a meeting for start of the month, like what changes are we going to do to our portfolio this month, especially for quarters. That applies even more there. I mean, at the beginning of a quarter, you know, because okay, let's pare back some of the losing positions, let's recommit some of the funds somewhere else, etc., etc., etc. That's why this works, you know, quite nicely. So, given that we also have the NFPs tomorrow, for me it's most important to monitor and notice what the market is going to do, how we're going to react, the initial reaction, and what's going to happen afterwards. Are we going to fade it? Are we completely going to reverse? Because that's going to be very valuable information to see what I'm going to do for the rest of the month.
Right.
I mean, it's going to affect...
You know, that's a new piece of knowledge to me. So, you know, I kind of look for reversals into early, but mainly mid-month is when I look for reversals. But I'm always looking for reversals. So you're looking for direction. I'm always looking to fade something. So that's pretty interesting. So the beginning of the month sets the tone for the whole month, because I've heard it in the stock market and I've seen it work. I've also seen it not work. So goes January, so goes the rest of the year. And 2016 was a miserable example of that, because we had that real big bear market move a year ago in 2016 in January, and the market recovered all year. So
yes, you're absolutely right. I mean, nothing is written in stone and nothing is absolute.
Yeah.
You know.
Yeah.
And as I told you, it's just statistically more important than other days are. That doesn't mean that, you know, if you go back every month, you'll find a top or a bottom there. No, not even close. But you'll find it more often than statistics would imply. So I'm paying more attention to it.
Okay, this is an interesting chart, buddy. So that head and shoulders, the objective was reached, wasn't it, off that?
Yes, I already said that last week. We reached the objective, but look how it's working now. Today is the 3rd daily candle that gets rejected from there. One, the first time we reached it, one yesterday, and for the time being, one today. So the least to say, this move higher looks tired at the moment.
Yeah,
that doesn't mean that we cannot get another push higher, but for sure I wouldn't be long here. I still believe that this break above this line might prove to be important. but I would definitely look to rejoin if I wasn't in this trend. I would be looking to rejoin lower. For example, 86, 0.86. I mean, of course, is a good level to watch. Then a retest of the descending trend line is also a good level to watch wherever we find it, because it depends on how fast or slowly we move lower. But at 86, you know, we have it's the breakout level. It's also the 200 EMA. That's why I like this level in particular. And this is about Euro Pound. I'm just, I know you already covered it. I'm just showing, you know, the daily.
So your work kind of confirms what I'm seeing.
I'm definitely getting worried here. You know something? It reminds me, it's exactly the same kind of price action that made me book profits here. You remember when I said that on the dojo? Yes.
Yeah.
In silver, exactly. I started seeing, you know, that this move higher is tired. I mean, you get it from experience at some point as well. I mean, it was the 50% retracement, it was the 50 DMA, and just above we had the 200 DMA and the 61.8. So I was like, okay, I think it's likely that we're going to turn lower from here. But worst case scenario, I don't think we're going to make it above 1765 before we actually see a pullback.
C-Face members, after 1 million hours of screen time, you'll feel the market too.
No, that's true. And that's why I have to say to a lot of people that with trading, they should not become disappointed if they do not achieve good results initially.
Mastery of one of the most challenging things in the world to do in a year. Yeah.
Yeah,
I really think I've interviewed a lot of people, Steve, and I ask them when they finally make breakthroughs, epiphanies, you know, new paradigm, the way they're performing in the market. I'd say the average is 3 to 4 years before that happens.
I totally agree with that. I totally agree with that. And I have to tell to people that I've heard people being disappointed, like I'm spending so many hours and I'm not losing money, but I'm not actually making money. You know, and some of them quit at that point. If you've reached the point that you're actually not losing money.
You know what? They didn't love it or they wouldn't have quit.
Yeah,
and you know, that's a perfect example of don't just do this for the money. You have to do it because you love the mental challenge, you love the geometry and just the mental stimulus of looking at numbers and patterns. And if you have a passion for that and you're break even after 6 months, you're going to say, wow, I'm doing
even a year. I've seen people quit there, and I have to say to people that
you won't say, wow, what a waste of time because I didn't make money. You're going, wow.
If you are breaking even, actually, you are much closer than you believe in succeeding. Much
way
closer.
Ahead of the game. Most people are blown out. So,
yes,
but,
I mean, it's
if
almost
you're doing it strictly for the money, forget it. You're not going to continue to do it.
It's almost statistically certain that if you're not losing money and you persist a little bit more with the experience that time will bring and your better intuitive understanding of the markets, some things cannot, I mean, Blake is the absolute person to explain that to you because he has been mentoring traders for 20 years. It's a tough game. There is no question about it. But even if you have the best mentor, some things cannot be taught. Some things are, your brain starts receiving signals from the price action that you cannot interpret yourself.
It's the other side of your brain, left brain, right brain, it's your intuitive part.
Exactly. And that part will help you move from being, a break-even trader to being a successful one. But that needs time.
Talking about successful, Mr. Morrow is back.
Yes, he is. And yeah, he is back.
Hey, buddy.
He's back with us.
How you guys
doing? Welcome back to the USA, my friend.
Yeah. I'd like to say it's nice to be back, but it really isn't. I was enjoying myself there in Mexico. You know, it's one thing when you take a vacation and you're actually vacationing. This one was I actually performed the wedding. You know, I did the wedding, and I wed my sister and her husband, and it's not as fun when you've got duties, you know what I mean? So I really didn't relax until like the last 2 days, but then we did an excursion, so I didn't really get to relax as much as I'd hoped, but it was still a really great trip. So nice to be home.
Yeah. And we all know how families could be. Oh, you didn't spend enough time with me, and you know.
Oh no, everything was great. It just yeah, we had our fair share of family crazies, but it was good. Steve, you were talking about mentoring traders. I have conducted webinars and taught traders for about 15 years, and but you're exactly right. A lot of traders give up at the wrong time. They don't really see it through. But the fact of the matter is, it takes a lot of screen time to really understand the markets. And I think people have this, they come to the markets with this notion of, oh my God, it's so easy to make money. But when all actuality, it takes a long time to learn this, to learn the do's and the don'ts, and a lot of times you have to go through the process yourself. I can tell you till I'm blue in the face, don't do this, do that, trade this way, trade that way, but many times you just have to go through the process yourself and realize, oh my gosh, that was the wrong thing to do. And sometimes it takes a while before you figure out, oh, those are the right things that I need to do under those circumstances. But it's
another tincture of time, Blake. You can't learn experience. It only comes with the passing of time and living stuff. It does. I look at some of the guys that I trade with, the really good traders, they have these assistants, and they have these assistants for like 5 years that are learning from them before they turn them on, even giving them an opportunity to trade on their own. I mean, you think about it, 5 years of learning, and that's learning sitting next to somebody who is extremely successful. Yeah. And before they actually, allow them to go on their own, they're like junior assistant traders until then.
But I think, Blake, you've already witnessed
how fortunate for them.
And Blake,
yeah, and that's fortunate for them.
Yeah, it is.
As a father as well. I mean, sometimes no matter what you say, if we don't do our own mistakes, we don't learn, right? I mean, even if somebody experienced tells you that, you shouldn't be doing that for that and that reason, sometimes, it's in human nature. You need to do the mistake yourself, and that takes time, because we need to do a lot of mistakes before we learn enough, right?
Oh yeah, absolutely.
Blake's sons always listen to him.
I think you just described a human that hasn't been born yet, Dale.
Right. Well, Steve. Hey, I know you chimed in on a few things, and I know that you need to get going. So I'm going to go ahead and take over from here.
Sure, Blake. I was about to show the rejections in Aussie and Kiwi. Perhaps you want to start from there.
Well, I mean, I'll hold on. Can you guys see what screen am I showing?
Nothing. For the time being, we're getting nothing.
Oh, here, I'm going to have to do it this way. Here you go, Steve.
Give it to you.
Yeah, I made you presenter again, because then you're going to have to flip it back over to me. So.
Okay. You want me to say in 30 seconds the two things I want to say?
Go ahead. Go ahead.
Okay. This is Kiwi, 200 DMA. We mentioned that yesterday as well, and 50% resistance seem to be turning us lower. But most importantly, what follows the plan completely is Aussie. You remember, Dale, we had drawn down here a rebound to 74.50, and we said that we might even go up to 75, 75.10.
Yeah,
That's exactly what we did. We tested it 3 days in a row, and we got rejected. So Aussie is still, working perfectly as planned. We got the rebound when we saw the initial signs we were going to get it. We got the rejection in the second of the two zones we were monitoring. So Aussie is resuming, its bearish move. Now, obviously, Kiwi is a little bit more perplexed, as you see, because we did get a fresh, multi-week high, etc. So definitely, if somebody's looking for dollar strength in one of those pairs, obviously they should be looking for Aussie. Okay, Blaker, I'm passing this to you.
Okay.
Over everything else people want.
You mean Kiwi? Kiwi's the stronger right now.
Yeah,
anyway.
Kiwi is the stronger one.
Yeah, until we get the Aussie Kiwi turn.
Yeah, I meant before that USD is stronger against Aussie.
Yeah, I sat here, coming back and looking at all these charts, and honestly, looking at everything right at the moment, there's not a whole lot to do. I mean, there really isn't. I mean, I guess Steve, I know you got to go. So.
No, I can stay to listen a little bit.
Okay. So, the only thing I was looking at, I was like, okay, well, the dollar's back here at, we'd been watching this 161% extension when we first hit it a few days ago, and allowed for the dollar bounce, and then we came back down and we're basically retesting. And I know I saw you earlier this morning talking about a possible flag pattern that looks something like this, but I'm just looking at the dollar, and I'm not like super convinced that
I'm with you. Seeing that we didn't get any follow through, I'm starting to doubt that this was actually a bear flag. But something, I think tomorrow will be the tell, and the NFP reaction.
Yeah,
that might show us that today we just temporarily stalled, just ahead of the NFPs because people don't want to commit to, let's say, a new low in the DXY, or if actually this is just a simple retest, as you very well say, because at the moment it's 50-50. That's the truth. Since we saw no follow through, it's 50-50.
It is.
Ideal for a position trader would be for it to rally for this support to hold and rip into the dollar rip, maybe on a good NFP for a few days up towards that 98 level or so, and I think position traders would use that as a shorting opportunity.
Well, here's the thing. Looking at the dollar and really kind of being undecided here, I know the dollar is near, like, I'll draw it out for you guys right here. You have not only 161% extension, you have this 618, real big support down here. So the 618 is the big, low to high, it's all right here. But that's not really what I'm focused on right now. What I'm more focused on is actually gold. I mean, if you look at gold broke this triangle, and this has been very impressive to me. All right, let me get rid of this. I thought we were going to come down, a week or two ago, and we didn't. We broke above this resistance. We have, and let me get rid of this fib here. Okay, we broke above this little triangle resistance, and we're right up against major resistance here, which comes in at 1280. That's only 20 points away. I'm gonna tell you guys.
1280 is also the 78.6 of the previous leg lower, so it's a confluence of resistances there.
Yeah, I mean, I don't even care about the fib level so much, but you're right, it's right there at the 786. But I'm just telling you guys right now, if we break above 1280, you can just basically write off the dollar. The dollar is toast. There's no if and or buts. I won't even question it. I won't even think about it. I'll just say, oh, I'm going to sell the dollar. Gold is, you got to watch when big instruments or major instruments are near breaking points. This is a big price, and I feel if we break above 1280, the dollar is going to go to hell in a handbasket, and gold's going to see probably 1400. So and the reason why it's so big right now is because we are going into into the NFP. Well, how about if, you know, everybody saw a good, you know, ADP number today, but how about if the ADP number is completely off base and we miss tomorrow's numbers? You know, if that happens, gold could really break out, and if gold breaks out, I'll tell you, the dollar's going to get smeared, and I'm going to go into NFP tomorrow with no position, but with that open mind that that's possible. I am, just so you guys know, I'm joining Pauly on the Morning Edge, my old webinar, tomorrow through NFP. He asked me to be a guest, like, you know, a month ago, and I told him I'd join him. So I'm gonna be over there, you know, while he's broadcasting live. But I'll tell you, if for some reason gold, you know, jams above 1280, it's you know, lights out for the dollar. And gold has been extremely resilient, and I've been impressed with its resiliency. From a risk reward standpoint, it makes sense to be short gold right now. It does. But if you're short gold, or you've been shorting it the last week or two, you're probably getting a little nervous. And that's my takeaway from this right now is, why hasn't gold sold off? You know, why hasn't the dollar rallied more aggressively from where we're at? And I don't have those answers. I don't know. But I will tell you that if gold breaks out, you can't be long the dollar. There's you know, you just can't. I think the dollar's gonna come under a lot of pressure. Because I look at everything else. It's like I look at the dollar yen. You know, the dollar yen, despite the rally that we've seen in equities, why hasn't? And let me get over to the dollar yen here. Why hasn't the dollar yen rallied? I mean, I know we're bid up a little bit right now, but you know, if we're all at all-time highs in equities, why isn't the dollar yen, you know, trading at 116 or 118? You know, and I don't know.
Yeah,
and by the way,
correlations work till they stop.
Well, by the way, Blake, we also have divergence with Nikkei. I mean, USD yen is not only showing divergence with US equities at the moment, but also with Nikkei.
Oh yeah, the Nikkei. Excuse me, and I'm yawning because I've been sleeping in the last few days, so I'm getting up at 3 o'clock this morning was a little difficult. Yeah, the Nikkei has been rallying too. The dollar yen hasn't gone anywhere as well. So again, these are the things that would make me nervous if I was long, you know, the dollar yen and short gold, which is basically the same trade. That's why I think it's worth noting that if we do have a weak non-farm payroll tomorrow, if it comes in weak and we have, you know, and I think that will catch the market off guard. And that's why I think that's like the trade that all I'm waiting for tomorrow really is a weak number. And if we have a weak number, I'm shorting dollar yen or buying gold. That's it. If we have a strong number, I don't know what I'm going to do. You know, and that's a fact. I don't know, you know, will I, you know, sell the euro or sell cable, or, you know, I'm not really too sure at this point. You know, I still need to watch price action a little bit here. But the thing is I know for a fact that if we do have a weak employment number, and it doesn't have to be just it's not just a weak like headline number. I'm looking at, you know, unemployment rate and you know, wages and inflation. And if the number just is all around weak, and I can look at the number and go, wow, that was a really weak number, buying gold and shorting dollar yen is where I'm going to be.
Your gold chart, we went over one, I think it was yesterday anyway. And also you have someone who, Mark Yusko, we interviewed yesterday, and he has a, you know, big bull on emerging markets. He's bearish a dollar like you are, Blake. And your big chart on gold, it looks like your trend line, it may have been even a weekly, where it comes off the 1900 high.
Yeah.
Right. Okay, you've got that huge triangle. I mean, that, you know, I looked at that. Carter Worth likes gold. He's not bad. I don't know if you ever follow him. He's they call him Chart Master on CNBC, and he showed this big triangle too. I mean, it's a huge triangle. You're talking about a $900 triangle here, buddy.
No, it's enormous. I mean, that's why I think this trend line's bigger than, you know, it's the biggest thing that's on my screen right now. And
yeah,
and
I'm converted.
Yeah, it is one of those things that if we break out, you cannot, I repeat, cannot be long the dollar. I don't think, in my opinion. Well, at least I won't be. And you know, you guys do whatever you want to do. It's not, you know, I can't tell you what to do. I'm just saying that if gold breaks out, the typical inverse relationship is going to be a weaker dollar.
Ronit mentioned in the chat, and I already answered to that. He says, but gold and dollar can both rally. And I told him, yes, that is indeed the case, but only if we see it in combination with some very big risk aversion move.
Yeah, yeah.
In this case, they can both rally.
It's very. I won't say that's the only case, but very rarely are you going to see the gold and the dollar. If I had to throw a number, which I'm not I always tell people I'm not a statistician, but if I had to throw a number on it, I would say 85 to 90% of the time you're going to see them move in opposite directions. So unless you know, I would agree with you, Steve. Unless stocks are, you know, we're down, you know, 3% on the day. You know, I always tell people if you see gold, the dollar, and bonds rally at the same time, you don't want to be in equities. Anything, any type of risk type of environment. But that's not common either. It's not something that's going to happen all the time. So, but I'm going to tell you one of the probably the best correlations out there is if gold rallies, the yen's going to rally. The yen. So, you know, you may have the dollar yen going down, but you might see the euro yen really going down, or the pound yen, or something to that nature. So, and that's just something that, you know, I pay close attention to, and I trade off of pretty effectively, and pretty much my whole currency career as far as trading wise. So again, and I don't know what I'm going to do if we have a strong number and the dollar rallies. I mean, I would think gold's a good short here from a risk reward perspective, but it doesn't necessarily mean I want to short it either. So, all right. Sorry, it looks like Steve's out of here. Steve, have a great day, and we'll catch you. We'll catch you a little later.
Tomorrow. Bye-bye.
Okay, sounds great. Yeah, so Dale, you know, again, hey, a couple other things that I wanted to point out is you were talking about the euro pound. I still have my euro pound position. I have 2/3 of it. But I do expect a little bit of a pullback here. I'm very well aware. Actually, while I was gone, we had a nice little pullback here towards the 86.50, 86.70. Yeah, we came down. Yeah. We set up a nice little hammer. I guess it wasn't yesterday. It was 2 days ago. So we set up a nice little hammer. Gave us a nice upside follow through. We're a little divergent here. We're not overbought relative strength wise. Not at this point. I wouldn't be surprised if the euro pound came back a little bit. I would add back what I sold, because remember I sold several days ago at 87.26 right here. Mm-hmm. And you know, it's proved to be a good place to exit the portion that I exited. I would love to be a buyer on a dip. So if we hit a little bit of a new low, maybe 86.50, maybe 86 back to the 200-day moving average, I'm just going to reload down there. But I'm maintaining a position because I do think that that the going into the elections next week, into the UK elections, everybody is expecting that gap to widen even further towards, you know, Theresa May. So in essence, everybody's expecting the pound to rally. That's the given. So that's what the current expectations are. I don't know if I don't know how much upside follow through we're going to get with any type of pound strength. So that's why I'm more in the camp of, okay, let me go ahead and reload down here, and I think that's going to be where I look to reload my euro pound, because like I said, I already pared back a lot of my position, and I'll go back and reload if given an opportunity. So that's kind of what I'm looking for with the euro pound. But if you're sitting here looking at it, yeah, it did hit new highs and it was divergent. So it makes sense that it's coming down a little here. But I'm more or less maintaining a position in it longer term.
Yeah, it looks like it still has a lot of upside left, as long as 86 holds.
Yeah, and I think it does too. And I'm targeting towards 90 pence, excuse me. So I'm really looking up towards those levels. Like if we lose this little upward sloping trend line here, this should allow for it to come in. And I'm hoping that happens, because I'd rather be a buyer down here. I don't want to. I was looking at it this morning as we were trading it at 87.50. And this was when I first got up this morning. I was looking at it up here, and as it was trying to break higher, and I was like, I just don't want to buy it up there. I don't want to. I'd rather reload down here. So it's kind of playing out the way I hope it happens. So
I think it could.
Yeah. God, there's just looking around, Dale. I don't think there's anything to do with the dollar at the moment. The dollar may strengthen a little bit here, as gold pulls back from this resistance. But like I said, my focus at the moment is what's happening with gold, because we're so close to a key resistance. And being close to a key resistance, your focus has to be there. And I know that's what it is. Oh, I'm going to jump back around a little bit. A couple other things that I noticed about the pound, since I haven't been on since last week. We were looking at some of these pound crosses, and I don't know if you guys watched them from last week. Like, here's the pound New Zealand. I drew this out for you. I'm like, okay, well, the pound New Zealand will probably come back down here to 80 cents, 180, excuse me. We dropped to 180 almost to a T, and I haven't changed my drawings here. I left them the way I drew them for you guys last week. Pound New Zealand pulled back. Pound Aussie, we pulled back to the breakout point here.
Yeah.
Okay. Pound Canadian, drew the same thing out for you guys up here. Was expecting a pullback. We have pulled back as well. Now, we didn't pull back quite as deep as we thought, or as I thought. I thought the Canadian would gain a little bit more strength, but I think it's probably more or less to do with crude oil peaked around 50, and because crude oil kind of peaked and is showing some weakness now, it's not allowing for the dollar or for the pound Canadian to garner as much downside as I had hoped. But I didn't take advantage of these either. I'll be the first one to admit, I wish things will happen all the time, but because I was on vacation, I just didn't take advantage of this. But this came down, exactly where it should have. All right. Now, the good news is if you're trading the pound New Zealand, your line in the sand now is that 180. I mean, if you're trading it to the upside now, that's it. Like, there's no if, and, or buts about it, because if you break below 180, this pound New Zealand's, you can stick a fork in it. And that's good. I always like it when I can look at a chart and say, okay, this is where it is bullish, and this is where it turns bearish. Period. End of story. And you have that in the pound New Zealand now. For those of you that
have defined levels, Blake.
Exactly. Being able to. That's exactly it, Dale. If I can look at something and say, okay, no matter what, in my mind anyway, no matter what, as long as it's below here, it's bearish, and when it's above here, it's bullish. That bull bear line, once you get near it, and you can make that, you can very well define your risk. That's the best situation you can be in. And right now we're not. This would have been nice if I was sitting here yesterday and looking at it and saying, hey, I would have probably picked up the pound New Zealand yesterday. Didn't do it, but I'm just saying I probably would have if I wasn't traveling, and I was sitting here on the webinar. So, That's, you know, Dale, I wish there was more that I'm looking at, but I think we're going to have a much better picture tomorrow, especially following the NFP, because I'll be on the webinar tomorrow as well, but I'm going to be on the Morning Edge, which is an hour before this with Paul Franco. So, and I'll have a pretty good idea of where we stand after that.
How about a quick view on Canada? You commented you were glad you didn't buy it at support. The follow through was crappy. It was crappy, but we're having a little bit more. It's still trying to bounce off that line.
Yeah, you know, this is pretty well defined here. I mean, the dollar CAD. I mean, you can look at it again. This is one of those where you can say, all right, well, you know, as long as we're above 134, there's no reason to be on the short side.
Right.
Or maybe this trend line, you know, and probably more specifically, you can say like right above here, which is 120, 134.25. And as long as we're above this, you know, this little shelf of support, you could be on the long side. But you know, frankly, I don't like how the dollar Canadian's acting right now. I don't even like how the dollar's acting. You know, it's like, okay, well, again, I'm looking at gold, and I know gold's close to resistance here. Like, why isn't the dollar rallying more? I mean, we had a great ADP number. Yes, the weekly unemployment claims were kind of blah, but still, you know, why?
And we had a pretty stiff break in crude, and that Canada USD CAD did not get much mileage out of that big break in crude either. You know what I'm saying?
No, it hasn't. But again, I look at the Canadian and say, well, why is it not rallying further here? One of the other things that you have to think about.
Greg wants to sell it. Greg is saying we had 5 waves down, and we should be looking for reasons to sell it.
You know, I don't think that's really I don't think that's a unreasonable trade. One of the other things about the Canadian that really sticks out to me is this Dale. This is a big deal to me.
The false breakout.
The false breakout right here. I mean, this is this right here is a huge. This is a huge. Crap! I can't draw for.
And the positioning would favor it a liquidation break with USD CAD going down.
Right. So we had this huge, you know, this huge triangle break right here, and no follow through, zero. Yeah. So my 2 cents is we're probably going to be going lower eventually. So the question is, where do you sell it? I mean, I think this was such a big support, now going to be resistance, that I think you got to sell any rally to 136 if you can get it. I just don't know if we're going to get it. That's the question. Do we get it between today and tomorrow? I don't know. Sorry. Again, I apologize for yawning, but that's what I would be thinking is, okay, well, if we can get a short off somewhere up here like this.
Yeah, that's what I would like to do.
Yeah, I just, you know, I don't know how realistic that scenario is. Maybe tomorrow, but so see, tomorrow we don't have Canadian, we don't have
Canadian unemployment.
No. Canadian unemployment's next week. So we're not out. If we had Canadian unemployment and it came in weak, that might give us that opportunity to really spike it up here. But again, I'd rather be a seller up here. I don't know if I'd really want to do anything right at this moment. I can't help but notice. I can't help but notice it's that we're not getting much of a bounce, right?
Right.
And that's it. I think that's the thing that scares me the most, Dale, about the dollar is the dollar's lack of ability to bounce anywhere. You know. Yeah,
with these extreme DSI readings, then all it's doing is holding. It's not rallying. All it's doing is holding, and that does portend some dramatic weakness. No one wants to buy it.
Yeah, I mean, no one wants to own the dollar right now. Yeah, the DSI readings, you're right, are extremely low. Euro is at levels where you would think that you naturally would start pulling back somewhere up here. But the fact of the matter is the euro looks pretty damn strong. And what happens if we break 114? You know, what if we break, we break this channel that you see here, the channel that's been, you know, we break 114, next thing you know, we're trading around 116, 117. We break above that, and now you're going into the 120s. And there's not going to be a lot to stop the dollar, because there are so many people that have been leaning into long dollar trades with divergent central bank monetary policies, that why would you be short the dollar? So it has the potential to really catch a lot of traders off guard, and that's why I'm very weary of being long the dollar, and I have no dollar exposure right now, 0. Okay, but if I was long, I would be a little nervous at this moment, Dale. I would.
Okay, well then you're not, because you're not.
Right.
And you can relax, and sounds like you need a little vacation from your vacation. So
I do. I'm super excited about sleeping in this weekend. Really, I can't express that enough.
All right, buddy. And so break a leg with Paulie tomorrow, and
I'll be here tomorrow.
Okay, and I'm going to take a quick break now and see if Cody Willard shows up. I don't see him in the room yet. So
okay, I'll stand by here, and I'll be listening. And so go ahead and take a break, and you guys, and I hope you guys have all had a great week.
All right, love you, buddy. All right, be back in 5, Face. Hey, everyone. See if Cody's around. Don't see Cody here yet. We'll wait a few minutes. Everyone doing okay? Give me a Y if you are. Good, Patrick. So Aussie Kiwi is still heading down. Euro's heading up, but the pound is stronger. Kiwi still weak. Okay, necktie, I still do not see Cody Willard here. It was kind of a last minute fill-in.
Maybe you take a few moments to address some of these questions, and maybe some charts that people are looking at. Maybe people have better ideas of things to look at than I do, because, like I said, I'm kind of in that, you know, whenever you come off a vacation, and this should be true for anybody, I usually take a day to kind of recalibrate. I kind of have to get my head back around what's happening. I got to get up to speed with all the news that's happening, why things are doing what they're doing, and it takes me a good day or two, and that's why I could probably rely a little bit on some of the other traders out there to see what they're saying. You know what I mean?
Okay, I'm putting up a post from Ronit right now. Otherwise, what I was going to do if Cody doesn't show up is still planning on opening early for the NFP tomorrow. Face, although everyone will probably be at the morning edge to watch you, but we will open early for the NFP here in Face. Here's a shot from Arnand Raja. Looking at GBP CAD, looking for a rally back up towards this 180 level. Interesting view, showing some of its indicators, looking for potential cross. So nice look there, Arnand. On pound CAD, looks like it could have it in here. I don't see your risk. You're using clouds, Ichimoku stuff. Very nice view. Okay, so everyone thank Anand for this. Let's see what else we have. Otherwise, guys, give me a Y if you want me to open for the NFP tomorrow. Ronan, yours for some reason did not come up. Oh, it's Cody. Okay, Cody. How are you, buddy? I'm going to make you the presenter now. So, Cody, I'm looking forward to hearing your voice. And you could also share your screen if you'd like. If not, I'll show your website. Are you there, buddy?
Hey, I'm here.
Hey, Cody, how are you?
Excellent, Dale. If I could, it's a good thing I'm a technology guy, right? If I could
Yeah, you are. So you were able to figure it out? All right.
Slowly.
All right. I was showing your website, and you, Jay Leno with his arm around you.
Yeah, I actually was. I actually, after I left Fox, I had done the Tonight Show at the height of the financial crisis, and Jay and I and his producers hit it off, and
yeah,
I actually signed and became the first ever Wall Street correspondent for the Tonight Show. But everything I did was so, you know, and again, it was I did a couple of segments for them, including one where I made fun of the bailouts of the banks, including naming Goldman Sachs and AIG.
You know, I think we're kindred spirits. You know, we both love the markets and figuring out the jigsaw puzzle, but we also like turn on when a mic or a camera lights up and enjoy expressing ourselves and being a personality. Am I reading you right? Are we kindred spirits about that?
You know, we are, but I will tell you, I burned out on TV. I did 528 episodes in 2.5 years of that happy hour show on Fox Business, and, you know, hundreds of episodes as Larry Kudlow's sidekick before that. And I moved home to New Mexico, and I don't do TV. I haven't done it in 5 years, 6 years now.
Where are you at in New Mexico, Cody?
I'm in a beautiful mountain oasis town called Ruidoso, New Mexico, in southeastern New Mexico.
Oh, nice. Okay, I noticed you're on.
You can just kick on the camera. I'm not going to be, at least for now, I'm just talking, and maybe I'll have you switch over to my
that's fine. You don't need, you don't need, so you're showing your website here. Before we get to, you know, how people could work with you, Cody, I just want to talk markets with you a little bit. And I know that you did embrace this bull market. You've done well in this blow off, melt up, whatever you want to call it. But I have a couple of questions. Are certain things bothering you, like the lack of participation of the financials, the oils, and now the Russell?
You know, a lot of things bother me. So let me be clear. Okay. I've been listening a lot lately just to, you know, CNBC, Fox Business, and reading. Every day I read all the newspapers, and I've been calling some of my hedge fund manager friends and ex-hedge fund manager friends, and partly because there's a lot of things that that just seem so bullish still, and I'm trying to find the next black swan. I'm trying to find something to really be worried about, and things like lack of participation of various sectors comes up. Retail was one of the ones that came up yesterday when I was talking to an ex-hedge fund manager, and he was desperately trying to find reasons to be bearish because he's been bearish for the last 5 years. And now, you know, now it's too late to cover and sell and buy, I guess. So, you know, the psychology of that is partly into play. But anyway, the point is that I don't think that the participation argument it hasn't been helpful, and I'm not sure it is yet. You've got these revolutionary companies like Apple, Google, Amazon, Facebook, NVIDIA, all of which I own, and I've owned for, you know, a nice quadruple, or in Apple's case, a 10,000% return. And these things are still revolutionizing the world. And there's a reason that they're up so much in the last 5 years or the last 10 years in some of those cases. And there's a reason that they're up so much in the last 6 months and continuing to lead the market, because they're growing and they're revolutionizing the world, and not just a couple of industries, but across a whole swath of the economy. And that, all that being said, number one, look, I don't think you should be chasing those names at this particular moment. I've been telling my subscribers, if you haven't sold a little bit, 10% of those names, at some point you probably ought to soon, or now even, be trimming.
Okay.
And
So a little bit of pruning, but that's the maximum. Just prune it. Prune the tree. Prune the tree so the fruit can grow back.
I think that's right. And, you know, just partly portfolio maintenance. That's part of the reason people subscribe to Trading with Cody. A more accurate term would really be investing with Cody, because I invest in these revolutionary companies. I find them before they're discovered, hopefully, as I've done in the names I just mentioned. And I've got others like that we've got in very early on. And then, you know, we hold them for years, or in Apple's case, in my case, I've held that thing since March 2003.
Any you're looking at that are in more embryonic stage? And let me ask you this, do you categorize an IPO like Snap as something that's going to be revolutionary, or is it just a toy for the kids?
Well, yeah. No, let me answer your questions on, yes, I've got a couple that I'll mention in a moment that I think could be, you know, potential 5 or 10
And during this
baggers.
interview, I want you to show also Scutified, which is one of the cooler social community intelligence gathering places on the net that you're a co-CEO.
By the way, what I'm showing you right now, I'll show you Scutified. What I'm showing you right now is Trading with Cody, the chat room. And
nice.
You can see it's pretty robust every day. We're in there discussing things. And one of the stocks you'll hear me mention that I think could be another, you know, something you might want to look at getting into, that I think still early on in the game, is Palo Alto Networks. Of course, the day that you interview me, it's up. Here's Scutified, by the way. Of course, the day you interview me, it's up 17%.
I've heard the guys some of the guys on CNBC have been covering this too, Palo Alto.
Yeah.
You know,
so we own Palo Alto, and I don't, you know, I don't think it's too late. I think, again, I'm looking for a 5 or 10 bagger, I hope, on this thing. I think it's one of the leading, if not the leading, de facto standard network security play company. And I like to own, I think that's a great industry to be in. It's clearly a trend that's growing, network security, the need for network security, cybersecurity, and I want to own the best in class, and I think Palo Alto is at least one of those.
Okay, so they all got a pretty good pump on that recent cyber attack. Do you think that the U.S. needs to do something? Maybe they'll get a U.S. contract from the government, because just like our grid needs upgrading, so does our cyber structure, doesn't it?
Well, you know, I don't, it is. By the way, I just kicked out my webcam.
Okay, buddy.
Boy, I've gotten gray.
You've gotten gray, buddy. You don't know what
happens.
This is gray.
I guess yes, Dale.
All right, there's gray, buddy. All right, so don't tell me you turned gray. In fact, you know what? It's silver, and the precious metals look pretty good to me right now. So go ahead, Cody.
Nice segue to the precious metals over your hair. I guess I used to be golden, so I like gold better than silver, by the way.
Well, you know, you always impress me as a maverick on TV. You are a maverick.
Well, thanks. It's a good, something to strive for. Rockstar would be another one. Anyway, listen, I don't even remember the topic I was about to hit on with you.
Palo Alto and the cybersecurity in our country that's being...
I don't know that the government needs to be the driving force of protecting our networks. I think it's incumbent upon Google, Apple, Facebook, and, you know, the level 3.
John McAfee.
Yeah, you know, I think it's the companies themselves, and they know that. I mean, there's a competitive advantage to making sure that your data has never been breached, and that's been the case so far for, you know, knock on wood, Amazon, Apple, Google, Facebook, etc. So that being the case, I think there's a lot of growth in that industry, whether it's government spending or private sector spending, just the need to protect the networks and the internet and cyberspace and your own intranets. And so that's Palo Alto, I think, is another potential play. You asked about Snapchat, and I own some calls on Snapchat dated out, I don't know, 6 or 9 months, I think, maybe 4 to 6 months. I bought them, I don't know, a little bit ago. We're up a little bit on them.
After earnings? After earnings and you took it down?
Well, yeah, we actually bought them when the stock was like $19 a couple, 3 weeks before earnings, rode them into earnings, and unfortunately I didn't trim and head, or, you know, like you said, and held them right through it. Then, of course, the next day they were hit hard. But, and I bought 4 to 6 months out, so I was giving myself at least a couple of earnings reports to get through, so it wasn't all hinging upon one earnings report. I don't often like to buy a company that comes public until they've had at least 2, maybe 3 quarters of reporting, and sometimes that means missing a little bit of their early move. In Facebook's case, I had the opportunity to buy the shares on the IPO, and I declined because everybody, I had probably 26 emails and text messages from friends I didn't even know invested in the stock market asking me if they should be buying the Facebook IPO. At any rate, we did end up making Facebook one of my top 3 largest positions in common, and then a few call options long-term, long-dated also when it hit 25 on down to 18. So I feel like a genius on that one eventually. The point of that, the flip side though, I bought Google. I didn't buy on I had the opportunity to buy pre-IPO, as it came in the IPO at $37 a share, I think it was, split adjusted. And I didn't, and then I ended up buying it the first day it traded at paying 25% premium when it opened up on the open market that day. So I'll be flexible, but I don't often buy a company until they've had 2 or 3 quarters of reporting. The reason I own Snapchat call options is because expectations were and still are that they're growing 5% per quarter on their user base. And I just think there's an international and even United States opportunity for them to grow a multiple of that, 3 or 4 times that. They didn't last quarter.
Do you use it and do you use it, Cody?
Well, I'm sorry, go ahead.
You use it and put mustaches on your face and funny hats and things like that?
So flip back to my computer screen for a moment. One of the other hats I wear, I'm the CEO and founder of a company called the IM app. And we make apps for anybody that is on social media, and mostly celebrities. I have 60 years of producers worth of experience from The Tonight Show who worked with me or for me on this company. And you can see we're bringing in, are you back on my screen, I assume?
Yeah, we are.
So we've got just, you know, Doug Cass, Jim Cramer, Larry Kudlow. I spoke to Larry Kudlow. I just called him actually this week, 2 days ago, because I want him to start promoting his app. And so,
you know,
anyway,
when I interviewed him before the campaign, he didn't think Trump had a chance when I interviewed him.
I didn't either.
And then he was part of his team. Huh?
Well, Larry's done an incredible job of transitioning away from his show, and the Trump factor was a nice trump card for him. No pun intended. At any rate, the reason I say that is because, look, I'm in the app business, man, and these guys, what we do is we take the social media profile feeds for anyone, for Jim Cramer and his website. We take his Facebook, we take his Snapchat and put it, I don't know if Cramer's on Snapchat, but any of our app, I know like Bob Saget, for example, is on Snapchat, and we have the Bob Saget app somewhere in this. We have 170 in the store already. You take, anyway, Bob Saget is on Snapchat, and in his app, it has a screen, the fourth one over says, follow Bob Saget on Snapchat. And so because of that, downloaded Snapchat. I need to know what Snapchat's all about. I'm a technology investor. I'm an app CEO. So yes, I do use Snapchat, but I don't post on it. I don't put any of my own storylines or videos, much like I don't go on TV anymore. But
so these are all your apps. These are all your apps that you're showing here.
Yes, they're verified. We verify, you know, they're approved by the artist or the, you know, Marshawn Lynch, the athlete. We make sure we meet with their agents, their PR, or the talent themselves, and we get, they say, yes, I want to be on your platform. And then they actually, you can log in to the apps themselves, and these guys log in and comment back, and there's a whole community thing going across.
Wow, I think that we have the best FX and CFD research on the net. We have a phone app, and we should talk to you about that, having our app up here, because there's a lot of interest now that the dollar is, now that the dollar isn't a one-way street. And it's my belief that a lot of things that happen on stock exchanges, bond markets, that currencies are the fulcrum and the linchpin that a lot of these other asset classes spin around. What do you think? You probably don't even think about currency, do you?
Oh my gosh, of course I do. Yes, I mean, it's I think last time I might have mocked just the standard macroeconomic. By the way, you can take it back off of, you can put it back on my webcam if you want. In the meantime, I will at least go back to trading with Cody.
So you do care about currency movements. They influence your positions?
Well, I don't care about short-term currency movements, but I think in general, look, as long as the dollar is the reserve currency of the world, as long as it specifically the petrodollar concept exists, where Saudi Arabia and a lot of other oil-producing countries only accept payment in U.S. dollars, as long as those realities are here, the long-term trend is that the U.S. dollar is always going to gain value versus the other fiat currencies of the world.
But that's not what the chart says, Cody. If you look at a weekly and a monthly chart of the dollar, you'll see there have been intermittent advances, and each advance has put in a lower peak, including the recent one at 104. And if you're interested, you're only interested when there's a trend change. I'm not saying that we're going to be replaced as the reserve currency, but this reserve currency could get a lot cheaper. It's breaking a lot of trends. And if you look at a long-term chart, you'll see lower peaks all the way back from the 1990s. And we could see a serious, our president may get what he wishes for. He wants a weaker dollar, he's going to get one.
Listen, Dale, are you on my webcam or on my computer?
I'm just looking at your page, and you can turn your webcam off anytime. You just click the button.
Well, what I want you to do is be looking at my computer. Do you see what I'm looking at?
Yeah, I see Bitcoin. I see Bitcoin.
That's what I want you to. That's what I wanted to pull up while you were talking about all these the currency things. Look, I think there's a bigger picture in the currency world versus, forget Bitcoin. I guess that's a little bit off topic versus what you're saying, but except for the fact that
maybe it's
it
not.
does underscore that it's a fiat currency battle, right? And all central banks and the Republican Democrat regime and the developed economy governments of the world are in this endless battle to devalue their currencies and versus each other. And so it's in some sense a race to the bottom, and they do it as responsibly and slowly as they can, but that trend exists. So when you are, I personally don't think anybody at home should be trading currencies. I think you can follow them and you can get those economic concepts and just sort of think about them and the impact they have on, again, I think there's an endless demand for US dollars, which then helps fuel corporate earnings / stock market and asset bubbles. And that underlying economic reality exists long term. Whether the fiat currencies battle themselves more quickly on this downward spiral that they're in, or less quickly, and which ones are going to go up near term or even over the next 6 months versus the other ones, it gets to be such a long derivative from what you're actually talking about, which is these governments and central banks making moves that sort of control and manipulate their currencies versus each other, and then trying to game how the market's going to react to those manipulations.
Right.
It's a very hard game to play. And you're out there trading against the Morgan Stanleys and Goldman Sachs's of the world who have 100% profitable trading days for the last 6 quarters. And that's why they're trading currencies against people at home.
Interesting. So they're bucket shops too. Okay. Okay. Why don't you tell us a little bit about Scutify and how people might be interested in? I see Kiana. I've interviewed Kiana. She's advertising. She's a contributor. Kiana Danelle.
Correct.
And she covers FX, right?
She does. And she's a trader
Jesse
of
Colombo,
FX.
Bubble. Yeah. Okay.
Correct. Jesse Colombo's on there. A lot of former TheStreet.com guys are on there, from Robert Marson, Jeff Miller, Scott Rothbard. We have, just all kinds of people that are in there all day posting comments, commentary, charts, links, discussing various stocks. There's various channels and discussions, and
nice
people breaking off and having communities built inside of themselves. And you can get real-time stock quotes. You build yourself a stocks that you follow. Oh, where is that? Can never find anything.
Dashboard.
But you see all this crazy stuff on the left side.
Yeah.
Even
nice
the trend 100. Here's the 100 stocks that are trending on Scutify at this very moment.
Yeah.
Don't trade penny stocks. Don't buy marijuana penny stocks.
Okay.
But
Bill Clinton did, but he never inhaled the certificate.
Gary Johnson did, and that was funny, by the way. Well played. But Gary Johnson, former governor of New Mexico in the Libertarian 2016
Yeah.
candidate for president was a penny stock promoter for a marijuana company. He was a fake CEO for a few months. Got awarded lots of shares.
Wow. He should have studied his history.
Yes.
He should have looked at a map, though. Huh? So he knew where the Syrian civil war was. Okay, cannabis.
Exactly. But beyond that, here's where he was announced as CEO, and they did a 10-for-1 stock split. Here's the top where I'm sure those guys, insiders, were selling.
Yeah.
Here's where they awarded themselves some more shares because they sold all the way down. And here's where the stock is today. And on its way down to where it was before any of that happened. So
Cody, it was a blast. Now. It was, you know, I know you don't do TV and you're burned out with TV. So it even makes me feel even better that you would take the time to come into a chat room, talk to a few hundred of my community, and you know that you're a humble maverick to take the time out to talk to a little guy like me.
Truly, you know, it's. I gave the commencement speech at Western New Mexico University a couple of weeks ago, and one of the things I talked about is that it's just you always want to pull for the little guy, and you should be much more energetic working with small businesses and people that you know are bootstrapping like you've done it at some point in your life if you're at Western New Mexico University, no matter where you are in your life. And I truly pull for the little guy, and I love the little guy. I'm still the little guy, man. I struggle every day. So
I know you mean, Cody. You know, I live by this. Have you ever heard this? When you're going up the escalator in life, be kind to those going down. One day it could be you.
Exactly right, man.
Buddy?
And Dale, you know, I think, you know, I appreciate the invitation, truly. So thanks.
Yeah, it was great seeing you. And you don't have gray hair. Now you know what gray hair looks like. So everyone that trades FX in here, I recommend you follow Cody at Cody Willard at tradingwithcody.com and check out Scutify. So thank you so much for your time, guys. Cody.
Yeah, and just appreciate it, Dale. Keep rocking and rolling. Thanks, guys.
All right, buddy. See you, Cody. All right, Face members, I'll be here for the early open of the NFP tomorrow. Everyone have a good day. Hope you enjoyed Cody. I did. I had a great time talking to Cody. How about, did you guys enjoy him? Okay, everyone. Enjoy the rest of your day. And I'll see you tomorrow for the NFP. 5 minutes before the number, I'll be here. Adios, amigos. Thank you, Blake. Thank you, Steve. Thank you, team. Thank you, Face community. See you, Tom.